Thanks for joining us today. My name is Paul from First Macro Capital. Again, just a general disclaimer, we'll be making some forward-looking statements. For those new to the channel, we're a research firm for retail and professional investors. You can check us out at firstmacrocapital.com. We publish monthly reports on a new sector every month. We take a market cycles approach, identifying new sectors that present us with deep value opportunities, have great fundamentals, and a great story as well. And we apply technicals to avoid value traps that many professionals and investors get themselves caught into, which allows us to find best-in-class stocks. This helps us minimize our trading and compound our returns over multiple years. In Apple, back in September 2018, 2 weeks before the top. Haven't seen many other research professionals come out with a call like that. Again, this is why we take a market cycles approach. Let's get started now, everybody. In our hunt to find sectors and asset classes early in the cycle, few assets have been in more protracted bear market than nickel. Nickel is part of the overall commodities complex, which has been in a multi-year bear market since 2008. In the 2000s, demand that drove the bull market in commodities came from China as its real estate and infrastructure boom took hold. But what will be the main catalyst that drives the next commodities boom? In our view, it's the electric vehicle boom that will be the catalyst to higher nickel prices. Nickel fits the fundamental story of being cheap relative to other sectors and commodities. It has the story driven by the electric vehicle boom, but does it have the cycle multiplier that we at First Macro Capital seek out to provide those multi-year structural dynamics of a massive asymmetric returns? Well, really, if you look at this Tesla opportunity that Sari Mazda, CEO of Tesla's global supply manager, said back in early May of this year, told a closed-door Washington conference of miners, regulators, and lawmakers, the automaker sees a shortage of key EV minerals, according to sources. What are these key minerals? They basically focus on more usage on the nickel and less usage on the cobalt. But the bottom line is, as all these batteries get built up for this rotation into EV vehicles through battery usage, we're going to see explosive demand coming for these nickel and cobalt. Nickel is mined in more than 25 countries. What is it primarily used for? You primarily see it in stainless steel. You've got non-ferrous alloys, alloy steels and castings. 3% is in batteries. We think that 3% is going to be accelerating over the coming years, particularly as EV vehicles use more nickel as part of their our usage. So let's look at this chart. Pay attention here, everybody. So nickel demand and the exponential curve with EV vehicles. So first, let's look on the left-hand side. Now let's assume this chart is assuming from 100% utilization of mega factory demand related to nickel. So from 2017 to 2023, that is a 10x increase of nickel. 10x. Now show me a commodity right now that is going to see a 10x increase in nickel in demand use growth within a call it a 6-7 year period. Again, what does cobalt have? A 4x increase in demand. Now if you go further out, obviously these estimates are obviously wrong because no one really knows that these are obviously guesstimates, but 2028 from 2017 to 2028, you're going to see a more 19x increase in demand for nickel. That is massive. It blows away the usage. Blows away the usage of demand coming from nickel. But let's say these results estimates of nickel are only 50% utilization. That still means by 2023, that is a 5x increase in nickel demand. 5x. Show me in the next coming years what commodity has a higher increase in demand need than nickel. This is explosive growth. Explosive that few people are paying attention to. A lot of people focus to copper, but this is going to be massive demand. Cobalt will only be 2x. That is still, you had basically some of these semiconductor indices and sort of boom cycles that we've seen over the past couple years. They've all gone up 5x. So if these estimates are half right, you're going to see a huge demand coming from this area. And really, once you start looking, more importantly, if you look at the global EV sales projections in the coming years, obviously if we get a recession, things are going to be approximately, but as you start to go across 2020, 2021, 22, you're starting to get into the acceleration in this exponential curve with EV sales, and that's going to be just massive, and that's really where all this demand growth is going to start coming from. Now, in October 2017, there were only 17 lithium-ion battery factories under construction. Now, in 2019, there are more than 70 factories in under a 2-year period of mega factories that are currently being constructed. All of the battery plants that are being consumed are going to be consuming a lot of nickel. Now, to pay attention to that on the right-hand side with the pink star. Regardless of what battery usage they pick, the main commodity that will be driving it is nickel, cobalt, manganese, nickel, cobalt, aluminum. So you're going to see a massive amount of nickel demand coming from these battery factories. This is a massive amount of demand coming. Now, if you look at global refined nickel supply and demand, the past couple of years, we've been in a supply deficit. Now, obviously, these forecasts are assuming a reduction in the supply deficit going forward. If we get a slowdown in the global economy in the near term, absolutely we could see this back into surplus. But if we go back here, all this demand that is coming online, particularly with the active capacity within the orange in 2023, it's going to be a massive amount of demand coming forward. Also recently in May, we had BP withdraw selling its new nickel assets, putting BP in a position in what it sees an accelerating demand for nickel coming from electric vehicles, which we've talked about earlier. But new mines are not coming online fast enough for the accelerated nickel demand growth. Vale estimates there needs to be a new Sudbury, Voisey Bay, and PTVI in Indonesia built every year from 2024 to 2030. Even if these guys are half right, new nickel mines will have to be brought online, present wonderful opportunities. This nickel space is going to be huge going forward. So where is the nickel price? It's down more than 70% from its high set in 2007. Perfect. When it's been primarily in a bear market since the high set in 2007. It's been a disaster from 2007, call it till 2016, when many would say it's the bottom of the commodity cycle. But with the price action, it's getting ready to turn. The fundamentals and the story are starting to match. But from a turning point, we really got to sort of break out from these, call it this 16,500 range to really get things started. But at the end of the day, if we look at global steel users of PMIs reported in May, it continues to be below trend at 49.5, indicating a marginal deterioration in operating conditions. So that's not good for nickel in the near term, particularly once you look at sort of the global automobiles and auto parts index. It continues to be one of the worst performing sectors right now in the world. If you look on the right hand side, you see automobiles well below 48 on the output index. So that is not good in the near term. But again, if we go back here and we're trying to find multi-year plays where we've got the story that leads up to it, which is EV vehicles, we're trying to find things that are relatively cheap. This nickel's been just trashed since 2007, and it's starting to sit. What is good that we're seeing higher lows being set. Sentiment is slowly coming back into it. We wouldn't call this an epic bull market yet. No, far from it. We think for now it's one to watch, particularly given the health of the auto sector and what's happening, and if we get a slowdown given the trade situation. But for now, it's a wait and see of what happens. But from a story perspective, it hits the button, and we'll keep you guys updated on what's going on. Again, the story of what's happening here is over the next couple of years, it's going to be explosive demand growth, and there isn't enough supply coming online from new mines to accommodate this growth. You can again check us out at firstmacrocapital.com, where we provide new sector reports to our retail and professional investors every month. Monthly subscription is $89 a month. No hidden fees, no hassle. Cancel at any time. Sign up today at firstmacrocapital.com. And just a special shout out to the Raptors that won their first NBA championship. And take care for now.